Are you a student? Are you a working professional? Or you are a business owner? Taxes are an unavoidable part of life, but there are ways to save on them. In this video, we're going to share some tips and tricks for how to save on taxes. From deductions to credits, we'll cover everything you need to know to keep more money in your pocket come tax season. If you are feeling excited to learn, make sure to subscribe to the channel the right way. So, let's get started. Tip number 1. Take advantage of deductions. The first tip for saving on taxes is to take advantage of deductions. Deductions are expenses that can be subtracted from your taxable income, which can lower the amount of taxes you owe. Some common deductions include charitable donations, mortgage interest, and business expenses. Make sure to keep track of your expenses throughout the year and consult with a tax professional to see which deductions you qualify for. Keep watching, as in upcoming points, we will see more on how to save on by making these deductions. Tip number 2. Use tax credits. In addition to deduction, tax credits are another way to save on taxes. Tax credits are even better than deductions because they directly reduce the amount of taxes you owe, dollar for dollar. Some common tax credits include the Earned Income Tax Credit, the Child Tax Credit, and the American Opportunity Tax Credit for education expenses. Make sure to check if you're eligible for any of these credits and others that may apply to you. If enjoying and learning new stuff, make sure to subscribe to our channel. Tip number 3. Contribute to retirement accounts. Another way to save on taxes is to contribute to retirement accounts. Contributions to traditional IRAs and 401ks are tax deductible, which means they can lower your taxable income. Plus, any earnings on these accounts grow tax-free until you withdraw them in your retirement. So, not only are you saving on taxes now, but you're also saving for your future. Tip number 4. Consider health savings account. Health savings account, HSAs, are another tax-advantaged way to save money. HSAs are available to individuals with high-deductible health plans and allow you to contribute pre-tax dollars to the account. You can then use the funds in the HSA to pay for qualifying medical expenses, and any earnings on the account grow tax-free. So not only are you saving on taxes, but you're also setting aside money for future medical expenses. Tip number 5. Hire a professional. Finally, it's important to hire a professional to help you navigate the complex world of taxes. A tax professional can help you identify deductions and credits you may not be aware of, and can also help you avoid costly mistakes. Plus, their fees are often tax deductible themselves. Tip number 6. Start a small business. Starting a small business can offer many tax advantages. You can deduct many of the expenses of running your business, including home office expenses, business travel, and equipment costs. Plus, you can contribute to a retirement plan for your business, which is tax deductible. Tip number 7. Take advantage of flexible spending accounts. Flexible spending accounts, FSAs, are accounts that allow you to set aside pre-tax dollars to pay for qualifying medical expenses or dependent care expenses. By using an FSA, you can reduce your taxable income and save money on taxes. Tip number 8. Donate appreciated assets. If you have appreciated assets, such as stocks or real estate, consider donating them to charity. By doing so, you can avoid paying capital gains taxes on the appreciation and also receive a tax deduction for the full value of the donation. Tip number 9. Time your investments. When it comes to investing, timing can be everything. By holding on to your investment for longer than a year, you can qualify for lower long-term capital gains tax rates. On the other hand, if you have investments that have lost value, consider selling them to offset gains and reduce your taxable income. Tip number 10. Take advantage of state tax credits. Many states offer tax credits for various expenses, such as home renovations, energy-efficient upgrades, and even adopting a child. Make sure to research what tax credits are available in your state and take advantage of them when possible. Tip number 11. Use tax advantage accounts for education. If you're saving for education expenses, such as college tuition or private school tuition, consider using tax advantage accounts like 529 plans or a Coverdell Education Savings Account. These accounts offer tax-free growth on your investments and tax-free withdrawals for qualifying expenses. Tip number 12. Claim dependent tax credits. If you have dependents such as children or elderly parents, make sure to claim any tax credits you're eligible for, such as the Child and Dependent Care Credit or the credit for the elderly and disabled. Tip number 13. Keep accurate records. One of the keys to saving on taxes is to keep accurate records of your expenses and income. By doing so, you can maximize your deductions and credit and avoid making costly mistakes on your tax return. Tip number 14. Consider tax loss harvesting. Tax loss harvesting is a strategy that involves selling investments that have lost value to offset gains in other investments. By doing so, you can reduce your taxable income and save money on taxes. Tip number 15. Stay informed. Finally, make sure to stay informed about changes in tax laws and regulations. Tax laws can change frequently, and staying up to date can help you take advantage of new opportunities to save on taxes. Tip number 16. Maximize your retirement contributions. Contributing to a retirement account such as a 401k or IRA is one of the most effective ways to save on taxes. Not only do these accounts allow your contributions to grow tax-free, but they also reduce your taxable income in the year you make the contribution. Tip number 17. Consider charitable donations. Charitable donations are tax deductible, so consider donating to a charity or non-profit organizations that align with your values. Not only will you be helping a good cause, but you'll also be able to reduce your taxable income. Tip number 18. Take advantage of home ownership. Owning a home can offer several tax advantages, including the ability to deduct mortgage interest and property taxes. Additionally, if you lived in your home for at least 2 out of the last 5 years, you can exclude up to $250,000 or $500,000 for married couples of capital gains when you sell the home. Tip number 19. Keep track of business expenses. If you're self-employed or own a small business, make sure to keep track of your business expenses. These expenses can be deducted on your tax return, reducing your taxable income and saving you money on taxes. Tip number 20. Use tax-advantaged health savings account. Health savings accounts, HSAs, are tax-advantaged accounts that allow you to set aside pre-tax dollars to pay for qualifying medical expenses. By using an HSA, you can reduce your taxable income and save money on taxes. Tip number 21. Claim education tax credits. If you're paying for higher education expenses such as tuition and fees, you may be eligible for education tax credits, such as the American Opportunity Credit or the Lifetime Learning Credit. These credits can reduce your taxable income and save you money on taxes. Tip number 22. Take advantage of work-related deductions. If you have work-related expenses that your employer doesn't reimburse you for, you may be able to deduct them on your tax return. These expenses can include things like uniforms, work-related travel, and home office expenses. Tip number 23. Be aware of state tax laws. In addition to federal taxes, each state has its own tax laws and regulation. Make sure to familiarize yourself with the tax laws in your state to take advantage of any deductions or credits you may be eligible for. Tip number 24. Avoid early withdrawals from retirement accounts. While retirement accounts offer many tax advantages, withdrawing money from these accounts early can result in penalties and taxes. Try to avoid withdrawing money from retirement accounts until you reach retirement age. Tip number 25. Consult with a tax professional. Finally, if you're unsure about the best strategies for saving on taxes, consider consulting with a tax professional. A professional can help you navigate the tax code and find the best ways to save on taxes based on your individual situation. Tip number 26. Consider a Roth conversion. Converting your traditional IRA to Roth IRA can be a smart tax move, especially if you expect to be in a higher tax bracket in retirement. While you pay taxes on the converted amount now, you'll be able to withdraw the money tax-free in retirement. Tip number 27. Take advantage of tax loss harvesting. If you have investments that have lost value, you can use them to offset gains in other investments through a strategy called tax loss harvesting. This can help reduce your taxable income and save you money on taxes. Tip number 28. Know your filing status. Your filing status can have a big impact on your tax bill, so make sure to choose the status that works best for your situation. For example, if you're married, filing jointly may offer more tax benefits than filing separately. By taking advantage of deductions, tax credits, retirement accounts, and other tax-advantaged strategies, you can keep more of your hard-earned money. Remember to consult with a tax professional to see which strategies will work best for your unique situation. Thanks for watching, and we'll see you in the next video.